Let's bring in Oliver. Oliver, all of a sudden the wheat market turning around. So let's start with the good side of the equation here first. Any idea as to why that's happening?
Well, I think this is mostly relief. We saw a little bit of relief on Friday, and that's spilling into some momentum here to the upside today after trading lower for much of the overnight and early morning session. But I would zoom out on things and take a look at where we've come from. We're about $1 off of those recent contract highs. I think the March contract for Chicago was down about 18 and a half cents for the week. So this is a relief rally in what I think is a new bearish trend. We're starting to see a head and shoulders formation forming. A closeout above 820 would negate that and neutralize our bearish bias. But as it stands right now, we think that a trend of lower highs and lower lows could continue. There's a lot of significant support down at 775 to 780. We kind of tripped some stops and tested that at the end of last week, but weren't able to close below there. A break and close below there, I think, would likely accelerate the selling pressure to the downside just from a purely technical perspective. We know that the commitment to traders report on Friday also showed that the managed money is now net short about 700 contracts. It's split pretty even, about 80,000 longs and 80,000 shorts, and it'll be kind of a battle of the technical levels. The break and close below that 775, 780 level that we had just talked about, I think could start to spur some additional long liquidation from those funds.
You know, when you look at a corn chart, it had been kind of bumping its head on a recent uptrend line, if you will, or at least a line that you would draw across the tops. Is it just kind of due for a correction, and it would still be kind of stuck in a maybe an uptrending channel, if you will?
Yeah, so we talked about this on Thursday with Scott the Cow Guy. Being up in the mid 590s is really kind of the top end of the range. So even though the chart does look a little bit more constructive, there's a good risk-reward trade to the sell side. We failed in the mid 590s about 5 times over the last month, and last week's failure marks another one, the sixth time's the charm, I guess. So there's a little bit of a pivot pocket here in the mid 580s. If we can't hold ground through today's session, I wouldn't be surprised to see us retest the low end of the recent range, which is basically mid 570s. So a lot of people, when it comes to looking at charts and markets, they want to be really bullish or really bearish, but more times than not, markets trade sideways, and I think that's what we're seeing here in this corn market.
The U.S. dollar value, wanted to check that out. It started out a little higher this morning, about 200 points higher, and we're still hovering around that level, up 185 on December futures at 96.285 right now. Well, Oliver, we'll come back in a moment.